just so everyone knows, Nathan and Christoph are from the NFTI team. It's behind probably the biggest NFTX token index at the moment.
Yeah. Well, yeah, thanks for that introduction, and thanks a lot for having us. Yeah, so quickly introduce Scalara. We are the index provider and methodologist as part of DeFi Pulse. So we are mostly known as the creator and maintainer of the DeFi Pulse Index, available as the DPI token, and also the flexible leverage indices like F2X Fly, the Flies. I'm going to start just briefly with a quick definition of an index, but I guess you guys probably all know that an index is a rules-based investment strategy. That's most commonly indices are baskets. And for example, in TradFi, you have something like the S&P 500, which is the 500 largest US listed stocks. Or as I said before, DeFi Pulse Index, it's the largest, most prominent DeFi protocols. Indices are probably the most successful financial innovation in the last few decades in traditional finance. There's about $10 trillion in ETFs right now. And I think most people are aware of ETFs or invest in ETFs through their retirement accounts or personally through trading and so forth. So they've been very popular on TradFi and slowly finding their way also up in DeFi as more popular products for people that mainly want to have a low-cost product that provides passive exposure. So you don't have to spend a lot of time researching and picking and choosing and looking for alpha. You buy and hold and invest in a broad market or in a broad theme. And the main feature is actually that you benefit from diversification. And there's this famous quote that diversification is the only free lunch in investing, from one of the main, from a Nobel laureate in economics, because it basically allows you to lower your risk without necessarily giving up your returns. So that's kind of the main, diversification is the main driver behind the index revolution, if I call it like that. So now look at my slide. I'm going to first quickly talk about why. Why did we decide after DPI and the Flies, why did we create an NFT index? And then I'm going to get into the how. So why was pretty much, as an index provider, we're looking for uncorrelated returns, because as I said, diversification is one main goal for investors, and you need uncorrelated asset classes and returns to really make that are needed for diversification benefits. So after having products that track the Ethereum and Bitcoin markets with our Flies, so you have long and short exposure through the Flies to these two products, and we had DPI that gives you DeFi protocol exposure. We looked at NFTs and saw them as a unique new asset class that is quite distinct to existing products. And also we saw there's actually quite a distinct user base. So it's not just the performance is different, but if I guess generalize it a little bit, the average DeFi user is a bit more technical oriented, focuses on the tech behind the protocols and maybe on the financial and economics. But the majority of NFT buyers and traders and holders are probably quite different in that sense that they don't care so much about the underlying technology and a lot more about the art. They're also a lot more known in popular culture, so they're also different in the user base. And then lastly, why we created an index is, of course, that indices have the advantage that they lower the barrier of entry into that market and make things a lot cheaper. Because once you have an index token tracking the index, that's an ERC20, it's of course fractionalized, so you don't have to spend high floor prices to get exposure to very expensive blue chip NFTs, but you can buy a little share similar to pretty much the NFTX protocol. And of course, an index, if you have several of them together, you socialize the costs involved with maintaining an investment strategy because you're several people together in one fund. So how did we achieve this? Well, the main reason is, of course, NFTX tokens. We spent some time last year looking how can we basically solve that problem to make ERC 721s investable in most of the DeFi protocols that are needed to create an index, like the Vault protocols or the index maintenance protocols. And there really was only one that had like the breadth and the depth, and that was NFTX. The amount of tokens available and also the amount of liquidity was unique. So it was pretty easy to take these as the primitives and the building blocks for the index. And then methodologies, as I said, the goal was to have a blue chip, like diversified blue chip NFT exposure for users. So we had to make sure that we try to pick the largest tokens. So we select collections that have to be at least 20,000 ETH floor market cap. But size is not the only requirement. I think for blue chips, we also think that there should be a strong community behind it. It should be well established. They should behind their initial spike. There's of course the well-known first launch spike, and if something just spikes in the first day, that's not a blue chip. So we also wait a little bit for the project to mature, build up its community. Then secondly, it has to be investable. And that's guaranteed by using NFTX tokens. That makes sure that the index and the underlying constituents are investable, so it can be minted and redeemed, which is important for an index. And I guess as you see in the chart as a result, right now it's punks, doodles, meebits, World of Woman, Cool Cats, Chromie Squiggle, and Toads in the index. I guess most people would agree that these are blue chip collections, have been around for a while, have very strong following each. And the second feature, which of course is kind of new compared to our other indices, is that by using NFTX, we actually don't use the V tokens, we use the X tokens in the index. Since the index protocol that we use is Kuiper, which is kind of a hidden gem protocol because it's not depending on DEX liquidity, but can be actually rebalanced using market makers through an auction. So we can use X tokens that even though they don't have DEX liquidity, you can guarantee that it can be rebalanced and minted and redeemed. And the yield, given these 7 constituents that we have, I think used to be around 10% APR. More recently, with the market being more volatile, it's actually good for the yield. So it's kind of 14% more recently. So it's been going up. It's great to see. And yeah, the token by now, which is available on mainnet, but it's also found its way through bridging to Arbitrum Polygon, which is very nice because it basically means you can really get exposure to these NFTs, which cost like $100,000 or more for like fractions of a cent because transactions fees are low, maintenance costs are low. So that's actually great to see that they are being traded on Arbitrum and Polygon.
I just want to add on that last point, Christoph, about it being available on layer 2 on Arbitrum. I think that's from the NFTX perspective, I think that's one of the cool things about NFTI because it does open up new user types. So, for example, if you wanted to put like a few $100s to work and you believed in, blue chip NFT price floors, you were previously pretty limited in options to do that. The NFTs themselves are obviously priced well beyond that. And transaction costs on mainnet mean that, even buying NFTX tokens isn't a great option. But NFTI being on Arbitrum, it means that there's a low ticket price bet on a diversified group of NFT collections that you can make for very efficient transaction execution. And so that's why it's been great to see some early traction on Arbitrum. And by the way, that's some liquidity in NFTX tokens that you likely otherwise wouldn't have seen at this point.
It is interesting about Arbitrum and Polygon because it's gotten us talking about how it would be really cool to see like our vault tokens gaining more liquidity on these layer 2 networks. And then basically they would get mainnet is where they would get minted and redeemed and where like the reserves would exist. But then the tokens themselves can still travel to these other layer 2s where they can be traded with like lower fees and in smaller amounts. And so, yeah, that's a pretty cool aspect of like this partnership is that it's kind of opened up that bridge.
Yeah, for sure. And just like, I would love it, if NFTI is the kind of tip of the spear on any L2 that gets some traction for, using NFTX tokens on those frontiers.
Yeah, 100%. We deployed on Arbitrum recently, like our protocol, and then I think we're planning Polygon pretty soon too. Those seem to be like the 2 of the most popular at the moment. But yeah, it's really cool seeing you guys do this because like originally I started NFTX and the whole purpose was index funds. And then we kind of pivoted away from that more to like the liquidity and yield. And then that's how we ended up with these X tokens that can actually gain yield just from like swaps. And now it's like these X tokens are being built into an even superior product for indexes. So yeah, I wish I could say that I planned all that out ahead of time, but it just kind of happened. And it's pretty awesome, like that you can have this array of tokens that you're getting like 14% yield on, and there's no impermanent loss risk. And yeah, those can be kind of mixed together in fractional amounts. And yeah, it's great that you guys do the hard work of deciding which tokens to include, because I know some people always get upset.
Definitely. Yeah, and I think money Legos
Mhm.
were necessary first. You have to make them accessible and create like the breadth and the depth so that people have all the NFTs available that they want and the liquidity. And then it's a lot easier than to create these like derivatives like NFTI or FlawDAO and so on. So I guess
Yeah, totally. That was our major problem originally, is that we couldn't get enough liquidity. So we thought, well, we have to start incentivizing that somehow with fees and yield. But it's really cool to see it kind of go like full circle, and that you guys are doing this now, because I do totally agree that like there's this massive use case for people that want to get into the NFT market. I mean, I even talked to like my parents and relatives. They want to get into the NFT market, but like they don't know which NFT they should buy. And like I always just tell them, you should check out this NFTI token. It's kind of like a REIT, or like, and it's just like this index of all these different items, and you can actually earn yield on it. And it does the complicated thinking for you, because they're deciding like what to include.
of course, there's a lot of people that enjoy searching for alpha, and especially in DeFi, there's a lot of people the degens that enjoy spending hours every day and finding the newest alpha. But there's also a lot of people, especially in TradFi, that do not want to spend 5 hours a day researching their portfolios and so on, and they just prefer in TradFi and ETF and just lean back, buy and hold, and probably the same in.
Yeah, I think it'll be interesting if the NFT index TVL start going up a lot. I think in a way it would almost entrench certain collections as being blue chip, because like if NFTI has this massive TVL, then the chances of any one of those collections that's included like going down in value, it's lower, because you're basically raising up the floor price with all these investors. There's an interesting dynamic there. I do think it's definitely going to keep growing. So yeah, I guess we'll open it up now if anyone has any questions from the community.
Christoph, I had a question around like redemptions. You may have like covered this, and sorry if I missed that, but is there any like redemption mechanism or planning to have anything like that for the underlying?
Yeah, sure. So the protocol that is used to build up the index, or that is the index vault, is Kuiper, and that has a mint and burn functionality already. So you can go to Kuiper and find the address and go to Etherscan, and then there's the mint and redeem functionality available.
Cool.
Yeah, because I guess on index it's necessary whenever I guess the net asset value of the index is above or below the price. So if there's a spread between the DEX price and the net asset value, an arbitrageur could step in if gas fees are not too high and either mint a token and then sell it, or buy an index token and then redeem it. So that's possible. Yeah.
Yeah, and I think we're in discussions about some other stuff about better ways to arbitrage those amounts. So yeah, definitely keep sidebarring about that.
Yeah, and there's probably some more information needed around it. I think in general, I guess this art market is a bit more for sophisticated users, because you have to know the correct ratios and where to find them to mint and redeem. But yeah, I think that's something to spend more time on.
Hey, hi guys, hi everybody.
Hey.
Yeah, I would like to know how I didn't understand why there is no risk of impermanent loss for EL. I didn't understand that detail of the feature of the platform.
Mm-hmm. Yeah, so basically on NFTX, we have two types of staking. One type is liquidity staking, and that does have impermanent loss because you're pairing Ether with a token. So for example, like the Punk token and Ether, and as the prices go up and down, you end up with impermanent loss. But the other type of staking that we added more recently, it's called inventory staking. And basically, you just add the NFT token. So for example, the Punk token, and you don't add any Ether. And then basically, if the Punk price goes up, like you still benefit from that whole rise because it's not paired with another asset. And inventory stakers, they don't get as much fees or yield as liquidity stakers. They only get 20% because they're not taking on impermanent loss. But basically, the way we saw it is that even if people are just staking the NFT token like Punk, it's still a good thing for the vault. Because if somebody, you know, in theory, if somebody came along and staked like 100 punk, that would drastically increase the diversity of NFTs that people can pick from. There'd be like 100 more CryptoPunks for people to choose from. So it wouldn't improve the liquidity, you know, that's still an important aspect, and that's why 80% of fees go to the liquidity providers. But yeah, it is possible to just stake the inventory and then still earn like a fraction of those fees. And those are like the X tokens, so like X Punk, X Toads, and then those are the tokens that NFTI uses. Is just these single asset tokens that don't have impermanent loss risk.